So it's a whole different way of thinking. But what it does, it puts you as the real estate investor, it puts you in the driver's seat because you get to make the rules. You teach people about this world that have never heard of it. And now they're all excited. It's a win-win scenario. The local bank today, they might can get 3% in a certificate of deposit. We come along and pay them 8%. We don't borrow unsecured money. We always collateralize the notes with, here in North Carolina, a deed of trust. Most people call it a mortgage in most states. And so it's a win-win scenario. Everybody wins, and we get to make the rules. There's no limit to the amount of private money you can get. There's no limit to the number of private lenders you can have. When I was borrowing money from the banks, institutional money, and of course, if you're using hard money, all that institutional money has got a limit as to how many deals and amount of money they'll loan to you. There's no limit in this world of doing business with private lenders.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Who wants to get paid to buy properties and not take any of your own money to the closing table? My real estate attorney's check stub says excess cash to close, and I love me some excess cash.
I'm thrilled to introduce Jay Conner, the Private Money Authority. After being cut off by his bank in 2009, Jay developed a revolutionary funding system that raised $2.15 million in private money within months. With over $118 million in transactions and 500 homes rehabbed, Jay averages an impressive $82,000 per deal in profit while working just 10 hours a week through automation. In this conversation, Jay shares his experience of securing private money, lending, in unlimited amounts, regardless of your credit or experience. Disruptors, get ready for game-changing strategies from this nationally recognized investor who's mentored over 2,000 entrepreneurs in creative real estate financing.
Jay, welcome to the podcast.
Cherie, thank you so much for inviting me to come along and talk about the subject that I'm so passionate and excited about, that being private money for real estate deals. And why is that? Because private money has had more of an impact on mine and my wife, Carol Joy's real estate investing business than anything else we've done since we started all the way back in 2003.
Wow. Now, when you say private money, because there are so many different ways that you can finance real estate deals, I want to start out by just giving our viewers and listeners a foundation, because you have your traditional ways of getting money. Go to a bank, take out a loan. You may have a piggy bank or mattress money. What is private money versus your traditional lending? And some real estate investors use hard money. Can you just go through that with us first?
Absolutely. So the distinctions, and there are many, the distinctions between institutional money at the local bank or a mortgage company, and then hard money, and then private money is as follows. When we started investing in single family houses all the way back in 2003, the only thing I knew to do to get my deals funded is go to the local bank, get on my hands and knees and say, please fund my deal, and have my credit pulled and show personal financial statements. And they got to do appraisals and all that. That's all I knew to do. And that worked out okay until January of 2009, when everything changed. If time permits, I'll tell that story. So we got banks and mortgage companies, they make the rules. Now, this is one thing I had to get my head wrapped around when I started attracting private money from my real estate deals, getting money from my deals without ever asking for money. So one big distinction is that when it's an institutional lender, whether it's the local bank, a mortgage company, or hard money, and I'll get to that in a second, they make the rules, which is traditional. Most people think whoever's got the money is making the rules. They set the interest rate, they set the length of the note, the frequency of payments, the maximum loan to value. They are the underwriter when they're loaning the money. Institutional money, local banks, they make the rules. Now, hard money, What we mean by hard money is that is typically a broker of private money, which we'll get to in a second. A hard money lender is typically a broker that has gone out and raised private money from individuals, private money investors, and the private money lenders or investors invest in the hard money lenders fund for them to get a nice return. And then the hard money lender then in turn loans that money out to us real estate investors. And so it's different. So the hard money is different than say the local bank. Typically, they're going to pull you credit. But typically they can fund faster than the local bank. It's called a collateral-based loan. But in order to get the speed of closing on a hard money lender, by the way, I'm not poo-pooing hard money lenders. Some of my best friends are hard money lenders. They just use my techniques to go out and raise more money for their fund that they loan out to real estate investors. But anyway, hard money lending is going to have higher interest rates. Like today, your hard money lender might be between 12% and 14%. The length of their notes are typically only 6 months to 9 months. You can get an extension usually, but they want more money for extension fees. They're going to charge points, origination fees. Typically, they're not going to loan more than 65% to 80% of the purchase price. So there's typically a pretty good size down payment that you got to bring to the table. So it's expensive money, but if you're only going to use it for 6 or 9 months on a flip, then, the math may work out okay. Now let's get to private money. What in the world is private money? A private money lender is an individual, a human being, just like you and me, that loans money, invest their money from either their investment capital and or their retirement funds by using a self-directed IRA company. That's another conversation. But they loan up their money. And so a private money lender is a one-on-one transaction with no middle person involved between themselves wanting to invest their capital or their retirement funds, directly doing business with us real estate investors. So I've been doing business with private money lenders since 2009. I've been paying them the same thing. That's another big distinction. We make the rules. We are the underwriter. Instead of asking for a mortgage, we're offering a mortgage. A very different mindset. Cherie, people tell me, how do I get started raising private money? I said, the first thing you got to do is own the real estate between your ears, which means you're serving and you're teaching. Not one of my 47, I got 47 private lenders right now, Cherie, not one of them ever knew or heard of private money until I put on my teacher hat, which says
Not the teacher hat.
My teacher hat. And I taught them about this world of private money. They never heard of it. They never heard of self-directed IRA companies and how they can use their current retirement funds and get high rates of return safely and securely, either tax-free or tax-deferred. But back to the distinction. We're teaching them, we're exposing them to this world of private money, private lending. We set the rules as the borrower. So I've been paying 8%. I've been paying 8%, no fees, no points, no origination fees, no extension fees ever since February of 2009. So it's a whole different way of thinking. But what it does, it puts you, as the real estate investor, it puts you in the driver's seat because you get to make the rules. You teach people about this world that have never heard of it. And now they're all excited. It's a win-win scenario. The local bank today, they can get 3% in a certificate of deposit. We come along and pay them 8%. We don't borrow unsecured money. We always collateralize the notes with, here in North Carolina, a deed of trust. Most people call it a mortgage in most states. And so it's a win-win scenario. Everybody wins, and we get to make the rules. There's no limit to the amount of private money you can get. There's no limit to the number of private lenders you can have. When I was borrowing money from the banks, institutional money, and of course, if you're using hard money, all that institutional money has got a limit as to how many deals and amount of money they'll loan to you. There's no limit in this world of doing business with private lenders.
So Jay, one thing that I think is that we need to point out is that you are not a real estate broker and you don't have to have a license to do this. Like anybody can do this.
Correct. When I first started out, I had that same question. I said, as a real estate investor, do I need a license? And people ask me that question. And the answer is no. You are an investor, or your LLC or your land trust, whatever your vehicle that you're using to buy the houses. But no, we don't need a license. You need a license when you're going to represent somebody else. That's what realtors do. That's what real estate agents do. They list houses, they put them in the multiple listing service, and they're representing other people. That's why you got to have a license. Hey, look, the only person I'm representing is me. No license needed.
So, Jay, let's pretend that I'm a real estate investor or a would-be real estate investor, and I'm interested in private money. What about my credit? I don't have experience. I don't have a license. Do I need credit to do this?
That's another beautiful thing. Institutional lenders, local banks, hard money lenders, they're going to pull your credit. They're going to pull your credit. In this world of private money, your credit score's got nothing to do with how much private money you can get. Not one of my individual private lenders has asked to see my credit score. And here's why. Because it's a collateral-based loan. We've got a conservative loan to value as far as the maximum that we're going to borrow of the after repaired value. That's another important distinction. Our maximum loan to value is not loan to value of purchase price. It's loan to value of after repaired value, which means I get to bring home a big check every time I buy a property. Who wants to get paid to buy properties? Yeah, and not take any of your own money to the closing table. My real estate attorney's check stub says excess cash to close, and I love me some excess cash. Always bring them a big check when you buy. But back to the question on credit. I've been borrowing private money from individuals, and I taught them all. And you can too. I say just duplicate my program as to what I teach. It seems to work pretty good. And none of them have ever asked to see my credit score because I'm back in that note with the real estate that I'm purchasing. So if the deal goes south, they're protected. And what do I mean by that? New real estate investors ask me all the time, Jay, who in the world's going to loan me money and I ain't never done a deal? Who is going to loan me money and I've never done a deal? Here's the answer. If you don't pay the private lender, the property does. What does that mean? What that means is if you don't hold up your end of the bargain, you're giving them a mortgage or deed of trust, then guess what? If you don't pay them, they get the property. Now, they don't want the property. That's why they are a passive private lender investor. They don't want to have to deal with the property. But nonetheless, if you don't pay them, they get the property. And we keep a 25% equity cushion to protect them. We don't borrow more than 75% of the after repaired value, which means they're going to be protected. If it's a $200,000 after repaired value house, we're not going to borrow more than $150,000. Now, I'll buy that house all day long for $100,000 if it needs maybe $30,000 in renovations. But again, they are protected. Your credit is never pulled.
You've answered so many of the questions that I know that people are interested in. You don't need credit. You don't need a license. So now I just need to know where to find these private lenders, Jay. We don't have phone books anymore. Do I need to Google these private lenders? How can I find these private lenders?
So there are three categories of where you find private lenders. The first category is what I call your warm market. These are people you already know. They're in your cell phone. You go to church with them. You're in the Rotary Club with them. You play golf with them. It's the people on a regular basis throughout your daily life. That's your warm market, okay? I call it relationship capital is what that is. The second category of where private lenders are, and by the way, those people in your warm market, they never heard of this world. That's why you got to put on your teacher hat, teach them about it. Second category of private lenders is what I call your expanded warm market. Because if you want to scale your business, sooner or later, you're going to run out of your list. You're going to run out of your connections sooner or later. So the expanded warm market is how do you grow your network of relationships and connections? And of course, we all know there's a direct correlation between your network and your net worth, right? And so I'll give you one tip right now. One of the fastest ways to grow your connections is join your local BNI, which stands for Business Networking International. My lands, even little old Morehead City, North Carolina, population 8,000 people where we live, started up a BNI, for goodness sakes, 15 years ago. With BNI, the purpose of that organization in your local chapter is all your other fellow members are selling you, are talking about you. And there truly is only one attorney, one realtor, one general contractor, one plumber, one electrician, one HVAC, one essential oil sales lady, if you know what I'm getting at. And so when you join BNI as the real estate investor, you're the only real estate investor in that group. And so you teach your fellow members about private money, and who do you want to get in front of? You want to get in front of folks that are looking for high rates of return safely and securely. The third category of where you find private lenders are existing private lenders. They are individuals that are already loaning money out, already investing money with real estate investors. The challenge with that, though, is you're not going to put on your teacher hat. They already know what private money is. They're already lending money out, which means they might not be happy with your 8%. So now it's a negotiation conversation, and I don't want a negotiation conversation. I'd rather teach people what it is. But where do you find existing private lenders? I'll tell you a great place to find them, and that is at self-directed IRA networking events. So what in the world is a self-directed IRA company? That's a company that's been approved by the IRS to where an individual can take current retirement funds that are maybe in a 401k or a previous employer's 401k, or maybe they have an annuity, or maybe they've got dedicated retirement funds that are tax deferred and they got it invested in the stock market, any kind of dedicated retirement funds. They can move those retirement funds over to the approved self-directed IRA company. No tax penalties, no tax effect. They move that money over, takes maybe a couple of weeks to fund their account. Now they can loan that money out. They can invest their retirement funds. That's why it's called a self-directed IRA company. They truly self-direct those retirement funds, and now they can be a private lender with their retirement funds. And now all the interest that they earn into their account is either tax deferred until they take distributions, or it's tax free if they're using a Roth IRA, which means taxes have already been paid. And now all the profits, all the interest earned is now tax free. So so self-directed IRA companies have networking events on Zoom, in person. And interestingly enough, over 70% of individuals that have a self-directed IRA account want to invest their money and loan their money out to real estate investors. They want to be a passive investor, a passive lender. Great place to find existing private lenders if you want to do business with existing private lenders.
So this is really good. And so I just have all these questions for you, Jay. And we're definitely going to have to get you back on here to answer some of these.
Yeah, this is just part 1 of 3.
I know. It's just part 1. So the first thing that comes to mind, so now we have our teaching cap. But if I'm someone who's a bit of a novice, let's talk about numbers, because you can find the lenders, you can have everything worked out. But if I'm identifying properties that will get me the excess closing cost at the end, what sort of ratios am I looking at when I'm looking at properties?
Yeah, good question. So first of all, where do you find these properties that you can buy at discounted prices? I can tell you where you don't find them. You're not going to find them in the multiple listing service listed with a realtor. I haven't bought a property in the multiple listing service in over 5 years since COVID came along. There's no deals in the multiple listing service because particularly in our area, we still have low inventory. When I get a house renovated and turn it into a beautiful Southern Living, ready for Southern Living magazine pictures, I put it in the multiple listing service. I got multiple offers right away. We just listed a house on Country Club Road a couple of weeks ago, And in 48 hours, we had over 20 showings in our little town here, multiple offers. But anyway, back to where do you find them? And how do you find them? All the properties that we buy are called off market. And what we mean by off market is they're not listed with a realtor in the multiple listing service. So who are these people? There's all kinds of motivations that individuals have looking to sell houses and don't want to list it in the multiple listing service. The long list could be, unfortunately, somebody passed away. So now it's an inherited property and the family members or the heirs don't want to deal with it. It may be in distress. They don't want to spend money on it. So you got those people. Then you've got financial distress. You've got people that maybe lost a job. They can't keep up the payments. Maybe somebody got a divorce, unfortunately. And now that whoever's left with the house can't keep the payments up. So there's all different kinds of financial distress or distress on the property. So how do we find these people that are in distress or the property's in distress? We direct mail every borrower that's facing foreclosure in our local area. And we have since 2004. And we direct mail them and we offer them solutions. We put money in their pocket and help them get back on their feet and get their life going. So we serve people that are facing foreclosure before their property goes to the courthouse steps. We do a lot of lead. So we've got 7 different vendors that we pay money to every time they give us a lead. And what that means is somebody's going on Google and they've searched one of 75 different phrases, such as, how do I sell my house fast? Kind of thing. So those leads come to us from the different vendors. So that's how we find them. Now, back to your ratio question. So when you're paying all cash, whether it's your cash, God forbid, or whether it's a private lender's cash, if you're paying all cash, regardless of where the cash is coming from, here is the maximum allowable formula. The math makes the decisions, not your emotions, right? Take the emotion out of it. Let the math make the decision. Here is what we call the maximum allowable offer formula. So I take the after repaired value of a property. Where am I going to get that from? My realtor is going, we'll send the property address to the realtor and say, hey, we want the after repaired value. We've had someone notify us needing to sell their house. And so our realtors know that I want an after repaired value, which means they know we're going to put new flooring, new paint, new light fixtures. It's going to look and smell like a brand new home. So therefore, they're going to pull those kinds of sold comparables near that house. So I'll get the after repaired value from the realtor. We multiply that after repaired value. Here's the formula. Multiply the after repaired value times 70%. So that accounts for your profit, some carrying cost. Now, if the after repaired value is over $300,000, I multiply times 80%. If it's under $300,000, I multiply times 70%. And then I subtract the estimated repairs. So obviously, I can't make an offer until I know what the after repaired value is. I can't make an offer until somebody on my team has looked at the house and has estimated the repairs. So after repaired value times 70% or 80% less estimated repairs, that equals the maximum allowable offer. But I don't offer the maximum allowable offer because there's this guy that always shows up at every property that I buy, and his name is Murphy. And not only does Murphy show up sometimes, but Murphy's cousins and aunts and uncles show up. So I got to put some Murphy factor money into this calculation. So if it's less than $300,000 after repaired value, I'll subtract an additional $10,000 for the Murphy factor. And then that gives me my maximum offer that I'm going to make. If it's over $300,000, I'm going to subtract an additional $20,000 from the formula to now give me my maximum that I'm actually going to offer. And again, that formula that I just shared is only when all cash is being paid. What am I comparing that to or contrasting it to? You can buy a property subject to the existing note with seller financing We call that all creative financing, but that's a different show.
So why the distinction between 200,000 and 300,000?
Because the higher the numbers, the higher the after repaired value, then we're dealing in bigger numbers, which means I don't need to have a 30% discount. I can be happy with a 20% discount, less repairs, because I'm just dealing with bigger numbers. And when I'm dealing in smaller numbers, such as under 300,000, that's why I'm going to do the 30% discount.
Jay, this is great. But for someone who, may not have time to listen to the podcast or watch it, you have written a book on this subject. Tell me a little bit more about the book.
Absolutely. So my recent book is called Where to Get the Money Now. This is not an ebook. This is an actual book. And the United States Postal Service is still in business and it's open. Anyway, Where to Get the Money Now, subtitle, How and Where to Get Money for Your Real Estate Deals Without Relying on Traditional or Hard Money Lenders. This book reveals the exact private lending program and opportunity that I teach my new private lenders. And another important distinction, we never ask for money. We teach and we don't. And look, I've never pitched a deal in all these years. So when I come back on your show, maybe we can talk about how I get my deals funded without ever pitching a deal. That's a pretty interesting story as well. So this book, Where to Get the Money Now, it's $20 at Amazon, but look, don't spend $20. Let me give this book to you as a gift, just covers shipping and handling, and I'll autograph it for you. I'm also going to include 2 tickets valued at $3,000 for you to attend my upcoming Private Money Conference. Wow. I don't know another live event like that. So anyway, you can pick up the book at www.jayconner, and I'm an ER, not an OR. So Jayconner, JayConner.com/book. Again, that's Jayconner, JayConner.com/book. And I'll rush it right out to you with the tickets to the Private Money Conference.
Jay, thank you so much for joining us. And this has been so good. We definitely got to get you back on to talk about some more ways to help people prosper with real estate.
Absolutely. I'm just so thankful to be invited to come along to talk about my most favorite subject. And I look forward to coming back on to be with you again.
And look, before you leave, because you've given us some great nuggets, but I have to ask everyone who sits in that chair and shares with our audience, if you had just one piece of information to share with entrepreneurs on how to play big faster with private money, what would it be?
Don't go alone. Don't be out there on an island by yourself. For goodness sakes, if you're brand new starting out, be sure and get a mentor or a coach that can hold your hand, and don't do it the way I did. I didn't get a mentor or a coach in real estate investing until I've been in it for 6 years, and I lost hundreds of thousands of dollars because I didn't know what I didn't know. Work with somebody for sure when you're starting out.
Guys, you heard it here first. We hope you enjoyed this episode. And if you did, please like and subscribe in YouTube and follow us on Apple, Spotify, or wherever you get your podcasts. Until next time, play big faster.
Thanks for listening to this episode of the Play Big Faster podcast. Want more entrepreneurial content?
I like this.
Make sure to subscribe for future episodes.
Already subscribed.
I just clicked on it.
Don't forget to like and leave a review. Share with a friend that needs this in their life.
I think you need this more than I.
Oh, and make sure to follow Cherie on IG at Cherie Speaks. And remember to play big faster.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jayconner.com/moneyguide. That's JCONNER.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jayconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.